Let's connect with Vineet Bhatnagar, Managing Director with MF Global. Vineet, for a sector which is going through a cyclical slowdown, Maruti as a company or Maruti as a stock has seen a 44% rollover already. Why is that?
I guess the pickup that we have seen as far as the broad-based market momentum in the last 10 days is perhaps giving greater clarity to people that going forward in the next quarter or two there will be that percolation of pickup at the economy at the grassroots level, and if demand were to pick up, and the rural demand being one of the strongest element as far as we have seen as in the last year or so, stocks like Maruti and also driven by new additions that they are making to models such as the Alto are going to definitely see favor from the investors and traders.
Vineet, hi, morning. What about the overall market? It's been a good series. We've seen a fresh high for the calendar year, post 5,700. What's the next step forward?
I think the market seems to be taking some sort of a breather right now. We have seen that from Friday onwards, and it is quite possible that today start will also be a bit tepid or cooler one. And I say that because there was a spurt in the volatilities that we saw in conjunction with the way the market was racing in the last 10 days. Sitting in the week of expiry, we are seeing that the distribution as far as the October series is concerned seems to be divided between a 5,700 and a 5,800 strike. At the same time, 5,600 or 5,580 to be technically more precise seems to be a good floor for the moment. So the market seems to be taking a breathing and perhaps then find a new direction in October.
Vineet, so let's stay with autos as a theme. Mahindra & Mahindra also has appreciated in quick time by about 7-8%. In the near term, which is a better one to buy, Mahindra & Mahindra or Maruti?
I think the segments are different as far as the the demand is concerned, and therefore if one were to play on two simultaneous themes, which is one relating to individual demand demand landscape, and that being supported by a higher spending power or disposable income over the next 2-3 quarters, then of course Maruti is the one that everybody would lean towards. At the same time, there has also been two other elements of demand that we should continue to keep in mind. One, one that is coming from a rural sector, which has been very robust, and two, also the shift in the preference of the type of cars that people are preferring, especially in tier 1 cities and metros. There seems to be a move towards sedans and the SUVs, MUVs. So that being the actual, shall I say, the demand mix or the product liking as far as the customers are concerned, we need to perhaps take a look at both of them simultaneously in the portfolio.
Vineet, you talked about levels of 5,700 or perhaps 5,800 as well in the October series. Do you think it is going to be an across-the-board rally, or will defensives as well as IT continue to be the laggards and continue to see profit booking as has been the case in the last few days?
Yes, IT and FMCG, you rightly pointed out, of course, have seen some kind of profit booking, and we had all started discussing about the valuations or the expensiveness of some of the FMCG stocks, especially ITC and Hindustan Lever. So that being right in front of all of us, it was perhaps sensible and smart to do some profit booking on those counters. But if you were to look at both things at the same time, and I'm talking about two sides of the coin, both being contrarian. One where all this conviction of a pickup in the economy does not come about, and therefore an expected cooling off of the interest rates, and therefore a pickup in the economy in the next 6 to 9 months were not to happen. One would see that on the strength of the definition of FMCG, stocks in that particular sector, including pharmaceuticals, would start finding favor again. At the same time, if there is an economic pickup and we are seeing robust demand at the grassroots level, then again there is a good reason for us to look at names like an ITC and Hindustan Lever. So if you look at it, some of the stocks have actually started looking at traditional defensives, but also the growth stock of an emerging economy like India.
What is the deal with Cain India? The fact that Cain Incorporation or Cain Global is offloading their stake in Cain India on a daily basis, do you think that will remain a big overhang for the stock?
I don't think it is an overhang for the stock, but of course it's a strategic shift in terms of the ownership structure, and therefore the analysts on the street need to evaluate that as a long-term strategy for Cain India. That being it being a block deal in a tight price band as was just mentioned now, is not necessarily going to be a big concern as far as the price drag is concerned.
Vineet, sitting at home, for those who have not participated in Indian markets in last 1 month, I'm sure they are feeling left out. The left out syndrome has kicked in. So for fresh buyers, what should they buy? Should they chase beta, or should they still buy defensive stocks on every decline?
I think that's a story that happens over and over again. It is always, the story as far as retail or the private individuals are concerned. And I would recommend that instead of going for a high beta stock chase, which also brings about heartaches, it is better to look at it as a portfolio construction. It is always difficult for a non-professional trader or for a household investor to make money with a quick in and quick out as an initial strategy. It never gets implemented successfully. So I would recommend that take a view of the next year and a half, and then do the portfolio selection. They need not be defensive. They can very well be growth stocks. Let the amount of money go into good names that you are happy to hold on to.
We've talked about defensives, we talked about autos. What about banking as a pack? Because you have the credit policy as well lined up next month, and all focus really is going to be on the RBI this time around, because it's been a long wait since we haven't seen any rate cuts. How would you go about treating the banking pack in the near term?
I think, which is true that, we have been waiting, or the street has been, is hoping to hear from the central bank as far as the rate cut is concerned. But rather than basing our expectation on that news announcement in the forthcoming meeting, it will be more prudent to again look at this particular sector with a bit of a 6 to 9 month horizon, because the volatility that comes about in the front line and then soon after that in the second line banking stocks, it's something that is difficult for a retail trader to handle. So I would still recommend that you go for the good names, or the frontline names as far as private sector banks are concerned, and that should keep you in good stead as against trying to play the price momentum in this particular sector now.
Construct a portfolio for me with the assumption that next, for someone who's looking at a 25% return in next 1 year.
Of course, I would continue to look at capital goods. I would again look at autos. I would look at some select names from banking sector. I would also look at names from the pharmaceuticals and FMCG, just to have a balanced approach to the portfolio.
Let's nail it down to some names. You've given me the sectoral lowdown, so why don't you tell me some names? And I'm not allowing you to use HUL and ITC because everyone is bullish on that.
Asian Paints looks okay to me. Siemens, BHEL, Crompton Greaves look okay to me. Axis Bank, ICICI Bank look okay to me. So these are the names that I will stick to.
And Crompton Greaves, because I've looked at the numbers, and I've looked at the numbers at length, a week ago. For 6 quarters in the trot now, that company has disappointed?
Yes, you are right, and that of course was visible even in the way the price was routed on the street. I guess on the back of what we believe is going to be long impacting SEB reforms is what is perhaps giving me the reason to pick it up now and include it in my portfolio.
Vineet, what about some of these mid-cap plays, the likes of a United Spirits, which has of course been buzzing high in anticipation of a deal with Diageo, and the other one from the FDI beneficiaries, the list really, the likes of a Pantaloon or for that matter a Dish TV as well?
I'd rather wait to see as to what exactly are the step that some of these companies would take on the back of a more supportive or favorable policy framework that we believe is now available to them. So as against putting them into the portfolio in anticipation of a deal announcement, one rather waits and sees rather than preempting.
Vineet, in this kind of an environment when liquidity is strong, news flow has improved, sometimes it's very easy to get carried away. So which are some of the pockets or some groups where markets are looking slightly stretched, and what are your absolute short ideas at the current juncture?
I think the stretched valuations are clearly ones where we saw it in names like HUL, because it was looking quite difficult to reason the type of PE multiple versus the kind of underlying growth that you could expect from the company over the next 12 to 18 months. So that was one particular area. The other thing that became very apparent was essentially based on the future guidance that came out from Infosys versus TCS, and there was that trade that happened where perhaps the whole street went on to pick up TCS, and that narrowed or corrected itself as everybody expected. So those were the pockets of overvaluation that one clearly saw. And as far as the shorting ideas are concerned, I would still remain concerned about high beta stocks from the mid-cap space, and I say this more from the retail investors' point of view, because they always get caught and they always burn their fingers in terms of catching the wave when the markets are on fire, but they never get the opportunity to either get the right signal to come out of it, and they always find themselves holding a dead duck.
Vineet, September has been a dream series for Indian markets. Like I pointed out, we are up something like 9%. I'm sure in the month of October we cannot add another 9%. So what is the best case scenario for the month of October?
I think at this point in time, I'm not looking at it beyond 5,800 on the upside. I think the market needs to digest some of these gains, both on account of profit booking that could come about from private individuals, because they may be sitting on some of these names for a long time, and also from the smart money point of view, rather than buying on every highs, it may make more sense for them for some profit booking to come, some cooling off to come, some sideways momentum to come, and then add a new wave of buying, even if the liquidity was as supportive as it was in September.
Hear me out carefully. Before we wrap, give me three strategies: one pair strategy, one Nifty option strategy, and then one absolute long strategy. I'll keep the market cap constraints and I'll keep the group of sectors open. Pick and choose. 6,000 stocks to choose from.
Yeah, so the Nifty strategy will be buy one call of 5,700 strike and sell two of 5,800 strike. The long strategy that will be there in the cash segment will be buy Siemens or BHEL, you can pick. As far as the pair strategy is concerned, we will do a pair strategy of HUL versus Asian Paints.
Can you be more descriptive on your pair strategy? HUL versus Asian Paints. So do you sell HUL, buy Asian Paints?
Yes.
Okay. Thank you. Thank you for that explanation. Thank you for your insights. Good to have you on ET Now.